Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content for Monday, August 15th, 6:45 a.m. as I'm starting the video. And as always, please run your player at 1.5x to get the most out of this video. Let's run through futures really quick. Bitcoin holding 24,000, a little above 24,150 the last time I looked. Oil is taking a beating, down 4.5–5%. Equities are off about 0.5 to 0.75%. Over on the macro front, not a lot going on. We've got Empire State Manufacturing before the bell. But then for the most part, we're in a information vacuum. We've got Jackson Hole with the FOMC August 25th through 27th. So that's still a couple weeks away. Again, that's not usually a place where they actually make any rate moves, although they have in the past. It wouldn't be unprecedented. But they may be out with a lot of commentary about where we're at, kind of things with inflation and the market and da-da-da-da-da-da. So be aware of that. Have that on your calendar. And then on the earnings front, I didn't see a whole lot today, but tomorrow we've got Walmart and Home Depot, two big components in the Dow reporting. And then Wednesday, hot on the heels of that, is the other half of that combo. We've got Target, Lowe's, and TJ Maxx in retail. Those were the big names that stood out to me. Okay, let's dive into our charts. Got a lot to go through today, as always, so I want to plow right into it. TLT, this is our bonds, of course. Last week, we showed the nice bear market rally in TLT. TLT rising means rates are falling. Came up to this 38% level. We had our trend line on the bear flag, and then that broke on Thursday. Had a little bounce on Friday. But now we're below trend. So the door is open for rates to go higher and TLT to go lower. There's a big level here right at 113. You can see the volume over price profile has carved out a nice clear zone. You break below 113 and nothing's ever for sure, but I would imagine this would come down for a retag of the lows at 108. What would be different is for price to come back up and recapture the 50 and the 20 and recapture this trend line and then make a move higher, which means rates would be falling further. Now, and the reason I bring this up, of course, is rates tend to impact the long duration assets, mostly tech, bubble stocks, stuff like that. So even if you're not trading TLT, certainly have a handle on the trend and direction of it. Back on the VIX, of course, the market was up on Friday, VIX falling. We're coming into a zone. Now, it'll probably be up this morning because we're down a little bit. But I would be watching this 18 area pretty darn closely if we fall here. And I would certainly be hyper aware if we were to break out of this trend line, because once you break that downtrend line, it's usually goes up really, really fast. So, there was a break here. I don't have it in here, but you can see that there was a break, a break, and if and when this breaks above trend, you're probably seeing a lot of turbulence over on the equity side. Here's our Bitcoin chart. I still like this. I think from a technical standpoint, you got to be long against 24,000. Why? You've got a big void in the volume over price profile here, where it could move very, very quickly. But if you got a breakdown below 24,000 and a break below trend, then I think you've got a very objective short. And as we've discussed in earlier episodes, if you're not either don't have a futures account or are not comfortable with it, you can use the many ETFs that have sprouted up. I know there's BITO, there's GBTC. I know they have some short ETFs. So if you're in an IRA or something like that and you want to be short Bitcoin, you can find a short ETF to be long, if that makes any sense. So it's an inverse ETF. But I think this is in a really interesting position, being up against both the trend line and having support at 24,000. Here's our oil chart. Of course, down 5% this morning, more or less. Probably going to bring us down into this trend line here, about 88 or so, maybe 89. But you can see on this rally, brought us into both the trend line and 200 EMA resistance, and there it found a problem. And you can see that we're in this value range here, projecting those lines across, lining it up with the price action. You see that this 95 level, more or less, is really important. That's where the 200 comes in. I think unless you're a tactical trader here, for a solid, you'd have a solid long entry if you broke above the trend line and then broke above the 200. You could certainly take an objective long down here at these lows. Just make sure you've got to have a stop pretty close by, or else this thing could, if it breaks that level, then you're coming down into the 85 type level for oil. The title that I put on this morning's video is FOMO Frenzy, and we just keep going, but now we're in multiple yellow flag territory. NIMO up at 73, well above our 60 level. That's certainly cautionary. Percent above the 50 has done an absolute moonshot. This is represents basically a 7-week move, going from 9% above the 50 to 83%. And you can look back in time. Only been a couple of occurrences since 2019 where it's ever gotten that high, at least, on this time frame going back into 2017. So I think it's a time for a lot of caution and trimming out your longs. Certainly, I hope you've been going to the bank regularly and putting those paper profits in the bank, because now we're getting super extended across a lot of metrics. Here on the NASDAQ oscillator, we're right at 60. So again, look at the last number of years. It usually doesn't go much higher. It certainly can, get up here to 80 or even 99, 100, but it really doesn't happen all that often. So now the risk reward of being long is greatly diminished. So it's always that case where, buying down here at -60 is the scariest, and selling up here at +60 is, it takes courage, right? You see FOMO going on all around you, and from an emotional standpoint, people tend to want to pile in at this point, not be scaling out. So the bottom line is, I think you can still be long on certain items, certain names, but the runway has been greatly diminished in my view. Let's get into SPY. We had this open gap here, and we all but filled it on Friday. I think we're a few pennies short, but notice back in time, there was a number of rejections right along that line. So that is going to be some resistance there at the top of the gap at 127. Now, on the pullback, there are some logical places for support. The biggest being 415. I mean, there's not a lot stopping this. We're extended from the 8-day. We're above all the moving averages, so that's certainly bullish. But a simple pullback to 415 is certainly in the cards. That would bring price back into the 8-day, back into the 200, back in to these large volume over price bars. And I think that should be a mountain of support there. And whenever you see that, you get a pull in to 415, I think that is your objective buy on SPY. Why? Because you've got, it's the top of all this support. That doesn't mean it's going to work. What I'm saying is that from a risk reward standpoint, buying a pullback into solid support gives you a nice objective entry for a long versus here at the top where it's, already extended. So we'll see what the pullback, whether it's short-lived or it turns into more. What would really concern me would be if the pullback gains momentum and comes right through this big support zone here down to 410 and then loses it. Then you got the 20 and then you got the 50 down here at like 404 would be your next levels of support. Here on the 60-minute chart, we've maintained this nice upward trajectory of this channel. We're right at the midpoint. So we come back today, test the bottom of this channel, and if we were to break that, we've got a little level here at 420, but then we've got the top of the gap at 416.72, and then we've got that big level or zone, I should say, between 415 and 410. So those would be the levels that I would be looking at on the way down for potential bounce zones. And so even if this came down and filled that gap and had a bit of an overshoot, 410 should hold. I mean, it's obscured a little bit here, but you can see there's a lot of transactions while we chop through that resistance zone. And now all of that has become support. So we'll see how the day in the early part of the week unfolds. QQQ, we've identified 330 as the wall, right? Rejection, rejection, rejection. Large volume over price bar here at the top of the range. Now, price did do a couple of important things on Friday. Number one, got back above the 200. That's bullish. Got above the downtrend line as I've drawn it. That's bullish. And there was a gap here up to 330. So that's bullish. But now we've got to watch the same levels on the way down if we're going to see some corrective action. And I would frame it the same way that I just framed SPY. You want to hold the 200. If it can't hold that, then you're going to come back down into this 322 to 317 support zone. And then that's what you want to see hold on any kind of pullback. You get below 317.35, then you're looking at pullbacks into the 20 and then into the 50. And I've got an uptrend line off of the lows as a potential target if this were to come down and have some corrective action. Here it is on the 1 minute chart. You can see this was our gap on Friday. Trying to see. Yeah, I guess we actually had filled that late last week, and then we pulled back, and then we came and popped above it. But just realize that at that 330, you do have the downtrend line coming in, and you've got lateral resistance on the daily chart going back. So 330 is a definite pivot point. And, you know, if there's some kind of let's just run through a scenario. We have a red open, right? And then they start buying it up. Your first entry would be 325 on the reclaim of the bottom of the gap, the old gap. And then another buy would be on a breakout above 330. And I've got a level here at 335, which would be our first target on the way back up. So, a lot of support below. We've got some definitely good levels to gauge what's happening and just go level to level. IWM has been, on a relative basis, the big star of this run. You can see completely uncorrected thus far. I've got resistance here at 201.75. If it can break that, I've got to the top of this box 206 as a upside target. On the downside, notice where the 200 comes in, right here at, 193.63, right in that area. And then we've got this gap to fill, and then we've got the downtrend line that should act as support as well. And then we've got this large volume over price bar here down in the 188 to 186 area. So lots of levels of support on the way back down. Use those to your advantage, you know, as you come back down. I think the first big one is going to be the 8-day and the 200-day right here at 193.50, and then the gap. And then remember, price could come up and then come down to trend, and those trend lines that act as resistance on the way back up should be support on the way back down. And then in the back of your mind, you should be saying, if you're bullish, boy, I sure don't want to see that trend line break on the downside. Why? Then, if it goes up and then comes back down through, that makes the breakout look fake. And then you're back on the wrong side of the trend, as it were. You're back into an old trading range. And so if you see a break of trend to the downside, then you'd be more or less looking for an extended downside move at that point. Even though you've got some support here, it could come down, undercut it, and then pull back above, just because you've got a large volume over price bar here. Now, if we zoom down to the 60-minute chart, I think I've redrawn this a little bit since last time, but we've got this strong uptrend channel going on with the midpoint. You've got some support here at 198.50. Then you've got the midpoint. Once you lose the midpoint, you're probably going down to the bottom of the channel. And then if that breaks, then you're probably coming down towards this gap. Remember, always when you're looking at a shorter time frame chart, something that's very easy to do is lose track of your daily exponential moving averages. So remember that we've got the 200 coming in right here, right above that gap. So keep that in mind when you're contemplating, a gonzo short, something like that. You probably don't want to do that, right above the 200. Now, if you're a tactical trader and you get this breakdown here, then you can get on board for what could be like a $4 move. So, that's a great intraday trade. But on the swing time frame, just know you got the 200 in between. So let's jump through the FATMAAN names. Meta, we had trying to figure out the days. Let's just say this. Late last week, we had a perfect gap fill that came up and tagged the top of the gap. So this is filled. I left it in there because it should still be resistance. And right here, we're in the middle of no man's land. So really on Meta, if you're a bull, you got to have the bottom of the gap hold or break out. So your objective levels are going to be down at the bottom or up at the top. I think it's pretty hard to, take trades right here in the middle. You don't have a lot to shoot against. So just be patient on Meta. And if you're inclined to be on the short side and you see another run back up to the top that stalls, then you've got a very objective entry for a short to come back down to the bottom of the box. Apple has really been pressing it for this extended run. We've been walking across the top of the channel. We've got overhead resistance right here at 172.50. If price comes back down, clearly into this channel, I would expect, your first pullback into 169, possibly even 168 at the midpoint. But then notice if the midpoint breaks, you've got a $4 gap. Well, it's really $3 gap, 164.90 up to 167, about $3. You enter that gap, and then you're down at the bottom of the channel, and then that would be your objective long. And what you're banking on there is that price keeps behaving the same way until it doesn't. Bottom of the channel, top, bottom of the channel, top, using the midpoint as support. We had a touch here, haven't touched it in a while, come down. It may hold right here at the midpoint again, stay in the upper half, or it may just decide to come down and either spend some time in the lower half of the channel, or if it breaks, then a deeper correction. And the thing that I want you to notice when you're lining up your day or kind of planning ahead, or even on the fly when you're trading, you've got a big volume over price bar here where Apple spent a lot of time and did not violate this 164. For me, that would be a place where if 164 broke, you'd certainly, I think, want to be short there, because then all this becomes resistance, and then you can shoot against 164 on the downside. But first you got to come down and, see what happens inside the channel. Tesla, we had said last week that 660 was going to be a good place for it to hold. Why? Large volume over price bars, and you had an uptrend channel that was going to come in and act as support. And on Friday morning, did a lot of flirting with this level. But notice when you've got wicks on the bottom, that indicates buying pressure, right? When you have wicks on the top of a candle, that indicates selling pressure. So today, I think this 885 is your pivot point. But now notice the trend line comes in at a higher location, more or less like 875. If that were to break, then 860 is your first support. And then if 860 breaks, I think you get a fast move down to 825. Keep those levels in mind. Microsoft finally broke above 290. That was nice to see. But now we're right at the top of this channel and right below a gap. It's not marked here, but you might want to mark it on your, I have the levels here. It's 290.250 up to 296.25. That's the next objective technical event, is to fill this basically a $4 gap. On the downside, now you've got 290 as support, and then you've got an open gap down here that goes all the way down to the bottom of the channel. Amazon. I dropped these little channel lines in here. I don't know if it's all that tremendously useful, but does give you some visual references. Notice we've been pressing against 143.75, got a lot of rejections along that line. So that's your clear pivot for today. If it can break above last week's highs, then I think we can push towards 150. If it can't, this gap down here has yet to be filled. And then keep in mind all of these open gaps below that will eventually get filled, probably when the entire market rolls over. Google, grinding our way higher in this bearish rising wedge. We finished on the highs. I think this thing, the door's open to push higher. I would be pretty concerned being long if we drop back below 120 and a half, drop out of this wedge. Then I think you'd come down and most likely fill this gap. And don't forget that if we go to the daily chart, we've got the 200 that comes in right here at 122.56. And then this should be a mountain of support at 118.50. If you see 118.50 fail to the downside, I think that's a very objective short. And my target would be the bottom of the box down here at 106. And then this would be your bull trap, fake breakout. Because with all this support being in place, that's got to hold. I mean, just from a technical standpoint, that has to hold. There should be no reason for price to come back down and slice right through that 118.50 level. That should hold, and a bounce should happen if the rally is going to stay intact in Google. Netflix, real simple. We're inside of this big $100 gap. 247.50 is your pivot. As long as it can hold that, the door is open for much higher. You drop back down below, depending on how actively you want to trade it. I would imagine it would come back in here to 230 and possibly even 220. Come back into the moving averages. Look for support here on this large volume over price bar where all this trading happened. That should hold. If 220 were to break, you're going to come back down to 205 fast. And then that becomes much like Google. There should be no reason why Netflix fails at 205. And if it does, again, that would be another short entry down towards 165 at the bottom of the prior trading range. Semis really has like a double top kind of look. Here's your first high. You touched it here, came down, brought it right back up to the next, to the prior high at 245. I think that's your common sense pivot. Notice there is some bearish divergence going on. Here was RSI at this high, back up to the same level in price. Here it is here, lower than where it was before. And same thing with momentum, lower than where it was before. So we've got a double top look here. Price really needs to pop 245 to get out of that look. And so if you see this thing rolling down, depending on where it opens, you can be short against 245 and then look for a move down towards 237.50 and potentially down to fill this gap down here towards 230. But on the upside, if it can break out above 245, that gives you a perfect line to shoot against on the long side. ARC-F, kind of hovering near the highs. We did have this high up here, kind of an overshoot at 2150. I think you can be long against 21. You get a break below trend though, you've got a sizable gap here down to 119.50. And just remember, all these ARC names are your high beta moves. So if you know NASDAQ is down 1%, ARC's going to be down 2-3%. So if you can get those right, there's opportunity there. Over in genomics, very much the same kind of look. We've got a trend line off the lows. We're hovering right here at 42. You don't want to drop below 41. Otherwise, that opens the door down to 39. If you can break above 42, then my target is 43.25, and then potentially all the way back up towards 46. Flagship fund, big channel, not very steep, but enough. We're right here near the highs. A break above 52 opens the door towards 54. Gets rejected there. You've got the midway point down at 50.5. And then you've got some support coming in at 48.75. And then the bottom of the channel at 47.50. And don't forget, if you're trading the ARC, make sure you got that TLT chart up right along with it, because if you see TLT is falling, that's going to be a headwind for the ARC complex. That means rates would be rising. ARC-W, same thing, pressing against 64.25. If it can break out there, you got room to run to the upside. If it gets rejected there, you've got a fail safe with the uptrend line. You lose 61.75 though, then you're going to be testing this gap, which is looks like $1.50 wide down here towards 59.50, 59.75, something like that. So we're kind of in a void in terms of, big macro releases. We've got, we got through the inflation prints last week. We got through the FOMC the week before. People have been piling into this thing. We've got all the oscillators maxed out. We've got the percent over 50 on the NYSE up over 80. Only been there a few times in the last 3 or 4 years. So we're pushing to extremes. I don't think anything really has changed on the macro front. I think the bounce in the stock market and the drop in yields have, in essence, given the Fed more room to keep tightening. Remember that thing we talked about early in the summer? Jay Powell remains sitting on the high ground with a bazooka. And as long as the market holds in there and inflation is still, 8.5%, even though it went flat, I think they're going to want to see that, and they've said this, demonstrated trend lower. So I would expect, at least at this point, another 75 basis point rate increase in September. But that's a long ways away. And animal spirits can keep pushing. I would just keep a tight rein on your longs and not get over excited, because we are extended on many fronts, and keep your eyes peeled on your downside levels on any kind of pullback to see that they hold or break. So that's the way I see it from here. So thanks for spending some time this morning. If you're new to the channel, thank you so much. Please hit the alarm button and the subscribe button on the YouTube, and you'll be notified of future content. And if you want, go over in the show notes. There'll be a link to the blog site where you can drop in your name and your email address, and then morning, noon, or night, whenever I have a thought on the market or new official content, you'll get it right in your email box, and you won't have to look around for it. So let's have a good week. Keep your antenna up. Anything can happen. And just remember where we're at on our indicators, which is really stretched to the upside. So until we talk next time, this has been Chris Buss with Traders Profit Compass.